Today we're going to talk about the requirements for paying U.S. income taxes on YouTube income, which comes through Google AdSense. Now there are a lot of myths around this type of income. You might have heard that you don't have to report your income if you don't receive a form, a 1099 form from Google. That's probably not true. You may also have heard that you don't have to report your income if you made less than $400. That's also probably not true. Now I'll tell you why in a minute, but first let's talk about how AdSense revenue from YouTube is categorized by the IRS. In most cases, advertising revenue that you receive from YouTube through AdSense is categorized as self-employment income. This is especially true since you're probably making a profit. Usually YouTubers that are starting out are simply using some of their personal equipment, maybe a webcam they already had and a computer they already had to produce their videos. So they don't really have any business expenses. That means their money coming in is greater than their money going out, since you don't really have any money going out paying for expenses. So you definitely have a profit. In fact, usually all the money you make is pure profit. And even if you did buy some equipment, you probably did it with the intention of making profit. So it's hard to justify YouTube revenue as hobby income. It's usually considered self-employment income. Now here's the rules for self-employment income. As long as you're required to file a tax return, and we'll talk about that in a minute, you must report all self-employment income, no matter how small it is. If you just made $10 in YouTube AdSense revenue, well, that probably wouldn't happen because currently AdSense lumps your payments together and won't actually pay you a check until you reach $100. So let's say even if you only make $100 in the whole year from AdSense, you are required to report that, as long as you're required to file a tax return in the first place. So what people are required to file a tax return? For the 2017 tax year, if you made $10,400 throughout the entire year or more, you're required to file a tax return. So let's take someone who works at a fast food restaurant and earns $14,000 a year and also has $100 of revenue from YouTube. That person must file a tax return because they made over $10,400. And since they must file a tax return, they must report all of their self-employment income, even if it's only $100. And second of all, there's another test for who is required to file a tax return. Even if you don't make any other money in the year, you live at your parents' house and they take care of you and you don't have a job, but you make $400 or more of self-employment income, you also are required to file a tax return. So this is where the myth comes from that you don't have to report your YouTube revenue unless you make over $400. That's true only if YouTube is all the money you make in the whole year. If you have another job, you're probably required to file a tax return anyways for making over $10,400, and therefore you must report all of your YouTube revenue. So, how do taxes work for self-employment income? You might be familiar with how taxes work for a regular job. Basically, when you get a paycheck from your employer, they already hold some money back. They withhold some money to pay your taxes. And at the end of the year, you file a tax return and you figure how much tax do you really owe on one hand, and how much taxes have you already withheld out of your paychecks. And if you've withheld enough to pay your whole tax bill, you don't have to pay the government any money when you file your taxes. In fact, most people have withheld more money than they actually owe, so they get a refund at tax time. Now with self-employment income, when you get a paycheck from Google, they don't withhold any money for taxes. This means you owe all the taxes. You have to pay all the taxes on this money at the end of the year when you file your tax return. And in fact, if you make a whole bunch of money off of YouTube, you probably shouldn't be listening to me. You should probably have an accountant, but you actually might have to pay your taxes quarterly or periodically throughout the year. But for people just making small amounts of money on YouTube, you're going to have to pay all the taxes you owe on that money at the end of the year when you file your tax return. You might use software like TurboTax or something to file your tax return, but I think the easiest way to really explain how the taxes work is to actually look at the paper tax return form itself. So what we're going to do is we're going to skip over most of this stuff and only point out the parts that are important for people with self-employment income. So just to remind you on the overall structure of the United States tax return form, you start off with a section where you outline any income you receive. Then there's a few adjustments to your income, which can reduce the amount of taxes you pay. Then there's a section on deductions, which also reduces the amount of taxes you pay. And then this is the section where you actually find the amount of tax you have due on all of your income. So you'll see here in the income section, one of the lines is wages, salaries, and tips. So this is where you would put your amount you earned from your employment job that you'll probably have a form W-2 for. But there's also an additional line for business income. or loss. So this is just a single line where you put your total income, or basically your profit from your business. Now, there's some math that will go into calculating this number, and you do that math on an attachment called Schedule C, or the shorter version of it, Schedule C Easy. But at a really high level, let's say you earned $150 in AdSense revenue and you had no expenses associated with earning that money. You would fill out Schedule C, but that will just confirm $150 is your self-employment income, and you put $150 right here. And that number, plus all the income you made from your day job, will get added up, and your tax will be figured based on that amount. Now, there's one more important thing to realize about self-employment income, and that is a separate type of tax called self-employment tax. Now, normal income tax, you probably heard about tax brackets. That means the more you make, the more you're taxed on that money. In addition to that income tax, in the US, we have special flat taxes that fund Social Security and Medicare. Normally, if you work a normal employment job, your employer withholds the tax you owe for Social Security and Medicare. Sometimes those are called FICA taxes. And these Social Security and Medicare taxes as an employee cost you about 7.5% of your income. And your employer is also charged another 7.5% on the money they pay you, for a total of about 15%. Since this is a flat tax, there's no tax brackets or anything, this is normally very easily taken care of and withheld from your paychecks before you even have to think about it. Now, self-employment income, you have to pay that tax yourself. Not only do you have to pay the 7.5% that you would normally pay if you were an employee, you also have to pay the other 7.5% that your employer would typically pay for you. But since you're self-employed, you have to pay both halves. So you have to pay that whole 15% yourself. So this line is where your income tax will be figured. And this line down here, self-employment tax, where that additional 15% tax will be figured. So just to summarize, your income from your normal job will go here. You're going to figure out what counts as your income from your YouTube business. Yep, you're considered a business. That will go here. Your tax will be figured right here based on your wages and your self-employment income. And then finally, an additional tax, that additional 15%, will be figured right here using Schedule SE. So you have two attachments you need to fill out. Schedule C, where you figure out your net profit, and Schedule SE, where you figure out the self-employment tax that you owe. And there's one last little nuance, because normally your employer pays half of that for you. It's an extra big burden for you as a self-employed to pay both halves. The IRS throws you a little bone, and they do give you a deduction for half of that self-employment tax that you pay, the half that normally your employer would pay. So this will slightly reduce your overall tax. So let's look at Schedule C, where you figure out your total profit, your total income from your job. Basically, income is defined as revenue minus expenses. So if you earn $150 in ad revenue, but you spent $20 on a webcam, which is dedicated to your business of making YouTube videos, your income is only $130, and you'll only be taxed on that $130, $150 minus 20. And Schedule C is where that's all figured out. Luckily, since YouTube revenue is usually a fairly simple small business, the IRS has made a smaller, simpler version of the form Schedule C called Schedule C Easy. Let's make sure that we can use it. You may only use Schedule C Easy instead of Schedule C if you had business expenses of $5,000 or yes. Yeah, we definitely didn't have $5,000 of expenses. Yes, we use the cash method of accounting, which is the most common. As a YouTube creator, we don't have an inventory of goods we're trying to sell throughout the year. As I said, normally you always earn a profit as a YouTuber, so you don't have a net loss from your business. Often you only have one business as a sole proprietor. You know, this is not a more complicated type of business. We have no employees. We do not deduct expenses for business use of our home. We don't have any prior year unallowed passive activity losses from this business. And we're not depreciating or amortizing any capital like buildings or trucks for our business. So it looks like we're allowed to use this Schedule C Easy, which is very simple. All right, first, we write our principal business or profession, including product or service. I usually write internet broadcasting, YouTuber. Enter business code, see page 2. All right, page 2 says, enter the 6-digit code that identifies your principal business or professional activity. See the instructions for Schedule C for the list of codes. Okay, now I'm in the 2017 instructions for Schedule C. Near the end is a list of all these codes, principal, business, or professional activity codes. What we want is, it's a little bit weird, but it's under information, data processing services 519100, other information services including news syndicates and libraries, internet publishing and broadcasting. So 519100 is what you're going to put in your business code. Enter your business name. If you don't have a separate business name, you leave it blank. So most of us probably just leave it blank. Basically, your name is your business name as a sole proprietor. Often you don't have a separate business address, so you don't need to put anything here. As a YouTuber, you don't usually have to make any payments that requires you to file Form 1099. Now, you have a very simple form to figure your net profit. Gross receipts. This is the total amount of money you received in, your revenue. So this is where you write the amount of revenue you earned from AdSense in that year. If Google sends you a 1099, you can use the number from there. But even if they don't, you must report any revenue that Google paid you through AdSense. So let's say $150, put it right there. Total expenses, page 2. We don't have more than 5,000. This is just reminding us if we do have more than 5,000, we can't use the easy version. So as we said, all we did was we bought a $20 webcam for the sole purposes of using for our business. So we write 150 here, $20 here. Net profit, subtract line 2 from line 1, 130. If it's less than 0, meaning if you made a loss, you would have to use Schedule C, but this won't usually happen for YouTubers. This one, only information for your vehicle. We're not using our car or truck as an expense for our YouTubing business. And that's it. So it's just one page. This number 130 goes back on your main tax return. Business income 130. So in our example, let's say we earned $13,000 for our fast food job. $130 is our self-employment income. We're going to combine all the types of income. Our total income will be $13,130, assuming you don't have any of these other types of income. As we mentioned, we are going to have the deductible part of self-employment tax, attach Schedule SE. Schedule SE is also the schedule we have to complete to figure out our self-employment tax in the first place. So let's figure that out. This is another one of those where there's an easy version. May I use the short Schedule SE or must I use the long Schedule SE? Now these aren't actual separate forms. There's the short one here and the long one is on the second page. You can go through these and confirm it, but basically most YouTubers will be able to use the short Schedule SE. So net profit from Schedule F, which is for farming income and farm partnerships. So we definitely don't have that. If you receive Social Security, retirement, or disability benefits, nope, we don't have that. All right, net profit or loss from Schedule C, line 31, or Schedule C EZ, line 3. That's where we figured our net profit was $130. Combine lines 1A, B, and 2, $130. Multiply line 3 by 92.35%. All right, $130 times 92.35% is about $120. If less than $400, you do not owe self-employment tax. Don't file this schedule unless you have an amount on line 1B. Our income is less than $400, so let's go back to our main tax return. What it's saying is we do not owe any self-employment tax, so we can put a 0 here. And we won't have, because we're not paying any self-employment tax, we don't have a deductible portion of self-employment tax. So even though you don't have a self-employment tax, you still have to report the $130 as part of your main income. And that will affect your overall tax you pay. You just don't have to pay this additional self-employment tax. If we made more money on our Schedule C, say we made $550, so had $530 of profit, then our Schedule C EZ would say 530 here, 530 here. 530 times 92.35% is 489. Self-employment tax. If the amount on line 4 is $127,000 or less, and it definitely is, we multiply that amount by 15.3%. This is the amount I said that your self-employment tax costs. It's about 7.5% plus another 7.5%. So 489 times 0.153 is $75. As we said, it wasn't more than $127,000, so we don't have to do that. Here's the deduction for 1/2 of your self-employment tax. Multiply line 5 by 50%, enter the result here, and on your main 1040. So 75 divided by 2 is about $38. So you've now filled out Schedule C and Schedule SE. So back on our 1040, in this case where we earned $530 profit, let's go ahead and update that here. Our self-employment tax was $75, and the deductible part of your self-employment tax was $37. Again, we got that from Schedule SE. Our self-employment tax is $75. The deductible half of it is $38. So at a high level, this is how you report your income for YouTube AdSense revenue. Total income will go here, which you figure on Schedule C. Your extra self-employment tax will go here, which you figure on Schedule SE. And half of that will go here, which is the deductible portion. And that, at a high level, is how you do your taxes on YouTube AdSense revenue. Now again, you might use TurboTax or something, and it will probably ask you if you had any self-employment income. It will probably first ask you if you received a 1099. And if you did receive a 1099 from Google, you can go ahead and follow that prompting. But if you didn't, it'll probably ask you, did you have any additional self-employment income for which you did not receive a 1099? Press yes and follow the further prompt. Honestly, I actually prefer to fill out the tax return forms myself instead of using any software. But even if you do use software, I recommend at the very end of it, you double check the actual forms itself. That software will create a 1040 form for you. Double check it and make sure these numbers make sense now that you have a deep understanding of how taxes work for AdSense revenue.